I see. Yeah.
Mm.
And this is also another like my long-term question that I had because in startup finance, usually nowadays, thanks to or because of AI, like company the valuation gets super high, like 100x or more ARR. But in the PE market or public market, usually it's like 5 to 10x.
Yeah,
It depends on the business model, but it's 5 to 10x ARR, right? But eventually, the private company matches with the public company's kind of financing valuation system. And how do you see or what's your thoughts on this like a gap between private market
it's
and
an
public?
amazing question. Yeah, so right now in late April, the top 10 companies are trading at a median forward revenue value of 13x, 13 to 14x, which basically means if they're forecasted to do $1 billion in revenue next year, the market's saying you're worth between 13 and 14 billion. And historically, anything over 10x is looked at as a premium because you're basically pulling forward 10 years worth of revenue, not even profits, revenue, which is used as the shorthand for measurement because not all companies are profitable in the public markets. Um, and then in the private markets, we're seeing a bit of dislocation where some of these like really fast growing companies like a Cursor or um, I don't know, there are a million crazy tools that have raised at these meteoric valuations. I mean, it could be 60x forward revenue, 100x. And so then what you're basically signing up for is an outcome that puts you on par with like I don't know, like a 5 or 6 billion minimum valuation, which means you'd have to be like basically doing a billion dollars or more in revenue, considering that the median company, not the top 10, is trading at like 5x forward revenue. So it's all to say that if you take on a massive valuation, you're signing up for a deal where you have to basically be perfect in the future. You have to hit revenue targets and grow to become a scale that is rarely seen. You basically have to go public is what I'm trying to say, and you have to be a decent, really decent public company if you sign up for like 100 forward revenue. Which we saw a lot of those valuations in COVID, and a lot of companies didn't make it out. Some did, but even then, it's like the investor probably only returned 3 to 5x, and they wanted 10x. So everyone's sitting there saying, "Why did we sign up for that deal?"